Hello, YouTube. Okay, so who's right? Is Social Security taxed at a federal level or not? You got half the camp out there that says, no, it's not. And then the other half is saying, well, what are you talking about? I'm living proof. I get Social Security and I'm taxed quite a bit. So who's right? Is it taxed or not? Well, they're both right. And the reason why they're both right is because it depends on where you're getting your income. If you're getting all of your income from Social Security, then yeah, you don't pay taxes. You don't pay 1 penny of federal taxes, even if you're receiving the maximum benefit, which in 2025 is, what is it? $61,296 a year. That's the maximum benefit. And if you're receiving the maximum benefit of $61,296, and that is your only source of income, you pay no federal tax. On the other hand, somebody who is receiving a combined income of $61,296, but let's say half of that is from Social Security and half from a pension or an IRA or some other form of income, then yeah, they end up paying taxes. They end up paying quite a bit more in taxes. So how can that be? Well, let's walk through this real quick. I'll try not to make this too long. So right here on the IRS website, they say your benefits are taxable, may be taxable, if the total of 1/2 of your Social Security benefits plus all your other income exceeds the base amount for your filing status. Base amount, I guess you could be looked at upon as a threshold. And there's 2 thresholds, for each filing status. We'll get into that here in a second. Let's take a look. Jump over here. Provisional income, as just stated, equals 50% of Social Security plus all other income. Once you've got your provisional income amount, how much is that is subjected to be taxed? Well, if you're single and it's less than $25,000, you're paying 0. If it's between 25 and 34, you're paying up to 50% of that will be taxed. And then anything above 34,000, up to 85% of that could be taxed. Keep in mind, it can never exceed 85%, although that won't factor in during this video in this example, but it's worth noting going forward. And then married, they have these thresholds. You can see those for yourself. So let's quickly move on here. So in this example, we're going to use a single recipient is receiving the maximum Social Security benefit for 2025 of $61,296 a year. So what is his provisional income? If that's his only source of income is Social Security, you take half of Social Security plus all other income, which is 0. So 50% of 61,296 is 36,408. All other income is 0. Your provisional income total is 30,648. Then you have to run those through these tables, right? So he fell in between this bracket, right? He has 30,648. So that gets subjected to a 50% of that number is subjected to income tax. Well, what is that number? Well, you just simply do some subtraction here. So 30,648 minus 25,000 is 5,648. 5,648 times 50% is 2,824. Taxable amount is 2,824. In this person's example, he's gone from a total income of 61,200, what did I say? 96? Yep, 296. That was his income, but yet running it through the provisional calculator, income calculator, he ends up only having to report $2,824 as taxable income. Boy, that is quite a savings, right? But guess what? It gets better than that because we haven't even applied the standard deduction. That standard deduction of $15,000 if you're under 65, $17,000 if you're over 65, either way, wipes that $2,824 completely off the books. So yes, somebody who's receiving all of their income from Social Security and Social Security only will pay 0 federal taxes. Pretty sweet deal, huh? Now, let me show you something. This is where it gets really bizarre. This is a spreadsheet I made that kind of does all this calculation for me. Just to show you my previous example, You got a guy 61,296. He's single. Provisional income becomes 3648. Here's your two thresholds you got to run them through. Ends up being 2824 is the taxable portion if single. So you went from a 61,296 total income to a taxable AGI plus Social Security of 2824. You got a $17,000 deduction. You pay zero taxes. Now, as I said earlier, what if you got another guy making the exact same household income, but it's split? 30,648 is coming from Social Security. 30,648 is coming from Social Security. And you got 30,648 coming from pension. I put those in backwards, but you can see what I'm doing here. Take a look at what happens. Well, first of all, just jump way over here to the bottom right. Look at his taxes that he owes on that. 3161. 3161 compared to nothing. Same household income, but because, and this is where, the confusion has come about over the past few months and weeks about who gets taxed and who doesn't, is because it just depends on where your income's coming from. So in this case, he's got a pension that's paying him $30,648, and he's got Social Security that's paying him $30,648. Well, his provisional income is now $45,972. Remember, before it was what, $30,648. So now you have to run that through those two thresholds. Again, 50% for the first threshold, 85% over the second. You do the math right here. $14,676 is the taxable portion, right, of his $30,648. That's the taxable portion of Social Security that he now has to claim as income. So that now gets added to the original income of $30,648. You can see how this can start to snowball. So you add the two together, you come over here, you got $45,324, standard deduction of $17,000. His net taxable income is $28,324 with a tax bill of $31,061. Quite a huge difference. Two different people, one that had 61,296 of total income, all from Social Security, he pays zero. Another guy has 61,296, but it's split. Half from Social Security, half from a pension, and he ends up paying a $31,061. It's pretty crazy, isn't it? So you can see why half of the camp says, absolutely, let's get rid of no taxes on Social Security. That's going to help me out a bunch. And the other half is saying, what are you talking about? I've never paid taxes on my Social Security. Well, now you know why. Thanks for watching.